All right, guys, back to work. Weekend's over. I know. Where did that weekend go? The summertime weekends, I swear they're shorter than the winter weekends, aren't they? Well, either way, back to work here this week. Hope you guys had a restful break. It's been a busy week ahead of us. It's Monday evening already. We're getting ready for Tuesday's trading session. I got a lot of great trades setting up on my radar for Tuesday. I'm going to make sure you know where the best setups are for tomorrow. That way you have a game plan to make some money on Tuesday. And as always, before we jump in and get this party going tonight, got a lot we're going to cover here in tonight's video newsletter. You better make sure, though, before we get into this, make sure you subscribe to our YouTube channel. I publish all the good stuff right here on this video. I don't want you to miss tomorrow night's, so make sure you subscribe. And as always, I appreciate you guys supporting the YouTube channel. If you enjoy the video, hit that like button for me, will ya? Appreciate you guys tuning in here tonight and watching this video. Enough of the intro, though, right? Tuesday is not going to trade itself. Let's get ready for Tuesday's trading session. We get some really nice setups, maybe some breakouts, some reversals. As you can see, lots of ranges here right now. We get some big news later on this week. We'll cover that in a second. But you know something's coming here right now. Range on the Nasdaq, range on the Emini, range on the crude oil. Ranges are great because we buy low, we sell high, we trade failures, and we trade breakouts. And I'll tell you, there are failures, there are breakouts, there are failures. There'll be no shortage of reliable, potentially profitable trades setting up here for tomorrow. And we're going to cover all these charts here in this video. Speaking of tomorrow, though, real quickly, let me just go right to the news calendar here because I do want you guys to be aware of kind of the situation happening here tomorrow and the rest of the week here this week. There really isn't a lot. There's none, right? There's no major news for tomorrow. So there really isn't anything scheduled besides kind of the impromptu Fed speakers right now, which the markets are not really obsessed with the Fed as much now as they were before the last FOMC. But you want to talk about obsessed? Yeah, we have what everyone is obsessed with right now, with this CPI report coming out on Wednesday. Now, why would that Wednesday's news affect us tomorrow? Well, boy, I just saw a headline come out of the White House this afternoon. Even the White House right now is prepping everybody for, I think the press secretary said, a heightened or elevated CPI report tomorrow. So things are a bit weird out there when the White House is coming out and saying, hey, heads up, CPI might be. Anyways, long story short, there might be a little bit of positioning tomorrow ahead of that. What has been just the most important news event every month over month the last few months has been the CPI report. I'm not going to go into the details more of it, but be aware of that tomorrow. Tomorrow may be a day where you see a lot of people. We've got earnings next week on some of the biggest companies in the world next week. So tomorrow could be a pretty active day, really, as people start to kind of take cover ahead of the CPI report. So that is kind of the big aspect of tomorrow. We've got CPI on Wednesday, PPI on Thursday. Oh my goodness, retail sales on Friday. We get some big headlines early in the session here this week. We'll talk more about the rest of the week's news here as we go deeper into this week. So be aware of that. But, keep in mind, we've got a lot of folks right now that are kind of, I think, bracing for impact here tomorrow on that not tomorrow, but Wednesday's CPI report. And again, with some big earnings coming next week, we might have a really, really busy week the rest of the week here in our trade room. Now, back to our charts right now. Whether you trade one of these markets or you trade all of these markets, I'm going to cover all my favorite trades in each of these charts tonight. Make sure you watch all the way to the end because I'm going to provide different trade variations, different setup ideas, different advanced tactics. And you know me, I try to save the best stuff towards the end of these videos. So I'll give you a reason to stick around all the way to the end. Let's go to the Nasdaq first, though. Nasdaq and the S&P are pretty similar, but you will see some pretty big differences here as we go through all of this here tonight. On the Nasdaq, a 4,000 tick chart. A lot of folks ask me what these time frames are. You can always see the time frames listed in the upper left-hand corner. A 4,000 tick chart here. on the NASDAQ. And there are, for the most part, there are 4 kind of big clues that are telling me and potentially telling you where the best money trades are going to be for tomorrow. First big clue is that strong move down. And we talk about this all the time on these videos. What happens, or what do we expect after a strong move down? We expect usually a deep pullback into resistance and a retest of that low. Now, we're not quite there yet, which might be another big clue we'll talk about in a second, but it looks like we're pretty close. So now, once those bears come in and the smart money, right, the big money in the market, whatever you want to call them, they sell high like a good seller should with a big move down, and they're taking their profit this low. What happens next? Now, we either get that bounce reversal off that low, or we start breaking down here, and there's quite a bit of open space down here. This is kind of some minor levels down here. There's a lot of open space below us here on that NASDAQ to go lower here, and again with that CPI report coming on Wednesday. So first big clue is strong move down. We're right there. Do we bounce off that low, which could really lead to a nice short squeeze, possibly going higher, or do we blast right on through? That's one very big part of this. The next one is the trading range, a bearish trading range, bearish into a range. Now, why is a range important? Well, because ranges act like magnets. So what we'll do is we'll find levels of support below, we'll find levels of resistance above, and like with all ranges, we are buying low, we're selling high, we're trading breakouts around those ranges. So if you think about what I said before about that strong move down, you can see why this range above us is a really valuable clue here. It really gives the buyers something to latch onto to buy off of this low. It also gives us, the next thing here is a possible failed pendulum and a rotation off the low. What is a pendulum? What? A pendulum. So the amount we go above the range is oftentimes the amount we go below the range. I bring this up because it's very different on the S&P. You'll see in a moment the S&P is very different in this category. So if we don't get, look at how close they came, but they never kind of finished off that pendulum there. That to me is a pretty big clue. And then if we can't take out that low and we come up off this low, that's called rotation off the low. And that oftentimes when a market starts off from below a trading range and then runs higher, a lot of times, and you'll see an example of this on the crude oil all the way to the end of this video tonight, is that sometimes those rotations off the low, especially if they've already taken out that low, these can really be explosive. And in fact, these are some of my favorite types of reversals as we get one of those slingshot reversals going higher here. So boy, there's a lot of clues. There's a lot of ways to make some money on this here tomorrow. How do we do it? Well, again, we know the buyers, right? The buyers want to buy off the low. The buyers want to buy that breakout going higher. What do the bears want to do? The bears have a little bit of patience right now. The bears can sell off the high of the range because the range is a magnet. Or if we can get a breakout, we can get short as we're going lower here. Boy, lot of different ways to cover this here right now. What if we go lower? Right? What if we go, look, it's a big news coming on Wednesday. What if this market says, you know what, or brace for impact, right? Duck and cover here right now. What if we go lower here? There are 4 different types of breakouts I look for in our trade room. I'm going to cover a couple of them here right now. Here's a couple you want to keep on your mind for tomorrow. First of all, overnight, strong move down, shallow pullback, lower low in price, traps, baby, right above that high. We call these 2-try traps or 2-try breakout. Remember, key here is strong move down. We've already taken out that pendulum. We've already taken out that measured move. Strong move down, shallow pullback, lower low in price, trap above that high. Where's a good target on this? Take that leg right there, measure that down. That'll give you a good target as we go lower. That's the most aggressive breakout as we go. Or maybe we see a pop and grind or a break and a grind. One of my favorite types of breakouts. It pops out below the low. It doesn't pull back very far, right? Kind of grinds down now. This is always a good giveaway. Mark that low, mark that high. So I draw that channel. I draw the channel backwards pretty much off of that low. And then one of my favorite trades is to look left, find a prior swing, and grab either a trap above a prior swing or get the buyers coming in trying to buy off this is the 21 moving average, right, on my charts here, buying off the moving average. Once those buyers buy off the moving average, think about where their stops are, right? And you can use those stops basically as fuel, right? As fuel to that short, that trap or that failure with that pop and grind channel as we go, right? Makes sense? Now, one more breakout, and then we'll move on to the reversal side here. One more breakout. Let's say, for example, now we either pull back to this moving average and they blast to that low, or let's say they take out that low, they pull back to the EMA and they blast from there. It's the same basic idea. The key is we have to get that breakout out of this trading range right now. Let's say, for example, we do take out that low, we do complete that pendulum swing, and then all of a sudden the pullback comes and the bears come in and they jump off of that moving average. These are very simple breakout patterns. 1, 2, blast, right? That jump off the EMA. Now, when that happens, don't chase these moves going lower. Draw a trend line off that low, up around that high. Think about where those prior swings are. Those are usually where some of the best entries are going to be. But again, draw the channel backwards off those lows. What that will do is that will allow you now, when the market pulls back here for you, you're going to be above the moving average. So you can go traps, you can go failures, you can go pullbacks, right, off the EMA as it goes. And then where's the target on this one? What does the target usually look like on this one? The key to this one is that first leg, right? Which is usually it's something like this. Usually it's push lower, it's pull back, it's jump off that moving average, and then again we're finding that new channel off that low, we're marking that prior swing, and we're grabbing our trap, we're grabbing our failure, right? Our pullback combo, all the setups we teach in that free trading course on the website. First leg, okay, and these ones are a little bit different. First leg, okay, kind of that first breakdown leg, and third leg. That's going to give you an idea of kind of where that target is, right? We're looking to short off the top of that channel, trap, failure, pullback. And by the way, I know that most of you guys and gals have taken the free course on the website. You've learned the setups. I'm always so amazed at how well you guys do with those setups off the free classes. Anyways, I know most of you guys have taken that class. You've learned the setups. You've learned all the entry tactics I'm talking about. But listen, if you're one of the few people who still haven't taken that free trading class yet, I'll put a little link up here for you in the upper right hand corner. Grab that little pop-up there for our free trading course on our website. Learn the strategy. If you're like me and you hate missing the best trades each day, or you're taking too many losses, or maybe you're trying to transition from a full-time job to full-time trading, the roadmap that I teach in that free trading course, all the entry patterns, when to look for them, when to skip them, I'll tell you, that will get you right on the right track, get you some good results in your trading, and most importantly, get you ready for trading with us every day in our trade room. So keep an eye out. Again, grab that free course, learn the setups. Keep an eye out for that breakout going lower here. Remember, first leg and third leg are very symmetrical. Now, how do we buy off of this low? Can I buy this market right now? There are really two ways you can buy this market. One would be coming off of this, obviously retesting that low, reversal. The other one would be if this thing snaps and runs higher here, which in all reality might be one of the best trades of the week this week, because, I don't usually do this very often, but if you look left on this, remember, I do not want to cloud the fact that we're very bearish right now. I'm not a long-term trader, and if you're watching this video right now, I assume you're a day trader as well. But if you look a little bit wider here, if I draw a trend line off those highs, bring it down to these lows, you'll see, this is... If you're a buy the dip type of trader here right now, you get a range overhead. I mean, it doesn't get much better than this area, right? So there's a lot of open space above us that could easily squeeze these bears out and put them in a little painful spot here. And boy, you can see there is a wide open space running back up to, well, for example, fill that gap, right? That's closing price from last Friday at 12,160. So again, it's very important that we understand we are not a bull short-term market right now. We are bearish right now. However, that could easily change. So how do we buy it? How do we buy off the low? The key here is momentum and location. If you want to trade a reversal, you need to first of all identify a major turning point on the chart, like that low of day. Then you have to look for signs of exhaustion. We don't just buy support in a bear market. Anyone who's traded for more than a few weeks knows this is not a very good strategy. And then we need some sort of trigger or some sort of catalyst, see if I can spell that correctly here on this video. So we need a turning point. We need some sort of signs of exhaustion, right? We're not just going to buy a runaway freight train, and we need some sort of catalyst, right? So where's the turning point? The turning point is easy, right? It's that big move down below a range below us. What would be signs of exhaustion? This is where you got to learn, and you're going to learn more about this in that free trading course I mentioned earlier. You have to learn about how to use the two-try rule. The markets love twos. Well, the markets like twos, they like threes, but in this case, signs of exhaustion, when human beings sort of do something, they try things once, they'll try it twice, but it's very, very seldom that human beings by nature will try things 3 or 4 times, right? You know, think about all the examples in your life. Try it once, okay, didn't work. Try it twice, okay, did it work then? Maybe I'll do it. If you don't, usually people give up. So in this case, where I'm going with this is I want to use that two-try rule, get the bears trying once, get the bears trying twice. Okay, that is the sign of exhaustion that I want. If you kind of look at it, closely on this move down, a little bit bigger. Most of these bears go lower, right? Bears go higher, right? That would be your sign of exhaustion right there. Anyways, going back in here. Now, once those bears come in and try twice, think about where their stops are, because now we need a catalyst, right? The best catalyst you're ever going to get in a reversal is to use stop losses. One of my first mentors in this business, boy, like 150 years ago, it seems like at this point, right? Back when the computer took up the whole entire office space, right? One of my first mentors said, Joe, the easiest money you're ever going to make is when you're trapping traders on the wrong side of the market, or when you're buying, for example, and sellers are caught short, and you can run those stops. So that's what you need for a reversal, in my eyes. I'm sure that people will argue with that with me, but that's what you need, right? So we get that big move down, we retest that low now. Again, I think that's a very big part of this. We do want to retest that low. Once we get that low taken out, now mission accomplished. Now we get the bears trying once, bears trying twice. There's your signs of exhaustion. Now you need your catalyst. You think about where those stops are. Nice little signal candle. You'll learn more about signal candles in that free video class I mentioned earlier. And once those bears fail, we can look for that rip going higher here for that two-try failure going back up into this trading range. Now, where do you think the buyers want to go at that point? Yeah, I know. We know they want to go back to the moon, back there. I get it. But short term, they want to go back and take out that high. Okay, that's their next objective. Right around that juicy $12,000, right? 12,000 big round number. The reason I mention this is because now if I can find a re-entry as we go higher, we oftentimes will get a new channel going off this low. I've got momentum now turning for the buyers. I'm going to go out. I'm going to draw a trend line right off those highs. Notice I love to draw channels by drawing them backwards. I know it's against our instincts, but welcome to trading. Everything good in trading goes against the grain with our instincts. So draw it backwards, draw it off that low, and again, you know me, right? Grab that trap, grab that failure, grab that pullback. off of that low. And again, I'm simply simplifying this right now. I'll talk about in that free video course I mentioned earlier, you'll learn about the entry techniques to use off of that low, right? You will. And then again, right, I want to get that follow-up trade before we go back up to retest the high. It's very, very important, right? Now, how do we trade this thing as it goes higher? Well, what if we don't get that? What if the market simply just blasts? Right? Or what if we get up here and the mark comes right back down again? How do I sell it? How do I trade the reversal on this? That's a really good question. Let's talk about that more on the S&P. The S&P is very similar to the Nasdaq. I'll do my best not to repeat myself too much here about on this video. But let's take a look here. Now, just like the Nasdaq, there's a lot of important clues on this that kind of lead us to understand where the best trades are going to be. Now, here's one big difference. On the S&P, we had a strong move down overnight. Anytime we see a strong move in one direction, what do we expect? A deep pullback and a retest of that low. Now, let me ask you a question. Did that move lower? Was that another strong move down? No, it wasn't. So would you agree with me on this? If somebody asked me, Joe, what happened in the S&P today? I would tell people they made a very strong move down. They got their pullback. They retested that low, but they didn't go much further. Does that look like a breakout that we talked about earlier? Does that look like a 1, 2, 3 breakout? Does that look like a strong move down, a shallow pullback, a lower low? No, right? Does that look like any of those? No, it doesn't. So this, in all reality, the bears were just battling this pretty much the entire session. Amazingly so, you can see how bearish this market is overall right now. They eventually popped it back up and sold it anyways, which you're not going to see a lot of times. You're not going to see a lot of times that happens. You can tell, and this kind of feeds into that idea, that brace for impact for that CPI report coming in on Wednesday. It almost felt like the markets woke up this morning and said, "Oh shoot, you're right. We were very bullish last week, right?" And it almost felt like the market and the S&P woke up this morning and said, "Oh, is that the CPI? Ooh," and its earnings next week kind of felt like that was part of kind of the awakening, right? Good morning, back to reality here on the E-mini this morning. Anyways, most important thing is we now strong move down, retest. I don't think this is a very strong move, but miraculously they come out and retest again. Now, what does that mean to me? Well, it means to me mission accomplished. Right? There now is no unfinished business for these bears. When I come in the morning or the afternoon or the evening, if I see a big move down like this and we have not retested, there's one thing on my mind, right? I want to go back to retest that low. But once we get back to retest the low, now it's like, okay, do we break through and go lower? Right? Do we bounce and reverse off that low? Right? So we're there right now, and we have a very important overnight session coming here next. The next one, obviously, the range. The range is pretty much the same thing, right? Bear market into a trading range. Now, you'll notice one big difference here. Look at that big move up, and it puts us down a little bit lower. Now, why is this important? This is important for us because on the Nasdaq, all it takes is a stiff wind to break this thing below that pendulum swing right now. On the S&P, though, we've really got to be careful as this thing goes lower because this is a little bit one of those little hidden levels of support down here. That could be an easy way to trap in some bears. That might be a really nice little short squeeze, nice reversal off of that low for tomorrow. And again, the bears, they've got to kind of push through that area here now. There's plenty of space. Look at that open space down bottom there on the S&P, but they have to be careful with a first leg, third leg measured move, and of course that pendulum swing. That pendulum swing is a really, really big part of my analysis here for tomorrow. And really, again, a lot of this is very similar here to the Nasdaq, right? As we go lower, we've got those breakout patterns going lower. I've really got to make sure I get below that pendulum. If we do take out that pendulum swing though now think about now we have that range back above us. This is exactly where, if we were to get this little trap high, they push this thing lower here. If we do see that breakout and go just a little bit underneath that trading range right now, all of a sudden now we're at a major turning point. We now have signs of exhaustion with the bears once, the bears twice. One of, just between you, me, and the rest of YouTube, a few people online, right? One of my favorite entries off a 2-try failure is a trap entry. Now, we talk a lot about traps in our trade room. You'll learn about traps in that free trading course I mentioned, linked up in the upper right-hand corner. But think about now, we take out that measured move, we take out that pendulum swing. Remember, pendulum swings are just rough areas, okay? So don't be too deep. It doesn't have to go right at the tick to that pendulum swing. Anything in this area will be generally close enough. But I'll tell you, though, you'll be amazed how many times those pendulum swings are literally to the tick. It's almost spooky how well they work sometimes. Anyways, think about that 2-try. And as I mentioned, if you can get one of the best ones here, right, those 2-try traps, that's another great, again, signs of exhaustion, running those stops, and then again, like I mentioned earlier, grabbing that new channel and then grabbing that rotation, going higher, the amount below, the amount above, and we now know where they want to go. I don't want to repeat myself too much on this because we covered a lot of this on the NASDAQ. One difference, though, is that pendulum swing and that breakout going lower. And again, do they break down and start to grind through it? Easy channel, right? Easy shot off of that high. Remember, first leg, third leg, take out that low, hold the pullback, blast on through, 1, 2, 3, break down, mark that low, mark that high, find that trap, find that failure, right? Find that pullback combo off of that. We talked that earlier. Now, as we go higher here, how do I sell it off of that high? How do I buy it as we're running higher here? Well, think about it. As we go higher here, what's my concern? What I always ask my students, think about 2 things. How is my location and how is my momentum? All right, momentum is the concern here. Location's great, right? What is not to love here? You got level here, range below us. It's an overall bear mark. Again, short term. Remember, I'm a day trader. I get it, that big move up from last week. I get that. But again, trade the chart in front of you. Don't overthink this stuff. If you're a day trader, focus on the short-term momentum. It's one of the biggest reasons for my long-term success has been just not falling victim to overthinking the long-term trend too much. Anyways, momentum is a challenge because now, remember, anytime we come off the low of a trading range, okay, anytime we go up underneath that range and then back up, again, we're overall bearish, but now we have momentum's a problem. So how do we sell into that thing? How do we sell it? Well, the exact same way, to be honest with you, we buy off of that low, is you have to look for a turning point. Okay, and there's a couple options here. I'll oftentimes draw a trend line off those highs, but this trend line is just too steep. You know what I mean? You're not going to want to sell off that trend line if it ends up taking that trend line out. Those steep trend lines like that. Again, like I said, take a picture of this. This is a very rare situation here where we held that low so well and to have more bears coming in. So anyways, long story short, we're at a level of resistance. We're at a turning point. I want to see signs of exhaustion, right? Get those buyers once, those buyers twice. Okay, and then again, think about where their stops are, and we can sell back down into that trading range. Where do the bears want to go? They want to take out that low. So on the way down to that low, I can mark up that low here, mark up that high here. The same idea, right? Same idea, just different direction. Okay, this little dance, this little tango the markets do around ranges is where the money is, right? We're looking for signs of exhaustion at turning points. Momentum is a big part of this. Again, 1 try, 2 try, use those stops as fuel. And then as the market rolls over, and again, I'm simplifying this right now, but again, at the high of that new channel, this is where we drill down. This is an 8,000 tick chart here on the S&P 500. We're not trading an 8,000 tick chart. We'll drill way down to a faster entry time frame, and we'll grab that entry off the high of that channel with those targets waiting down at that low. Okay, that will be a difficult job for these sellers. I'm going to warn you right now. That will be a difficult job for those bears. What is also a very good trade would be, let's say we pop up And let's say now the bulls come in and they hold that pullback, right? And they blast and jump off that moving average. Bear market still? Hell no. No way. Bull market once they jump off that moving average. Now remember, as I always say on these videos, it doesn't matter how strong and convincing that first leg is. They have to get us, it's nice to have a strong leg. It is, right? But if I want to reverse this trend, I need these buyers to show up and put some money on the board, right? They have to actually hold that pullback. If they don't hold that pullback, right, like the bears came in and held that pullback, right? And again, if they don't hold that pullback, it will sink right back down in, right? You'll notice here too, notice we popped up and see as we pull back here, the buyers tried once, the buyers tried twice. Do you see the little trap right there? That's a good thing to point out too for you guys, because that was the same idea we had as we go lower for that 1, that 2. Remember I said earlier, my favorite entry is that trap right there, right? That trap low. See that little guy right there? So real quick, if I go up and go 1, 2, that's the easy one, right? And I try to keep it simple on these videos. That's the easy one. But let's say it does go up and kind of V-top like that, pulls back, and then all of a sudden now, buyers try once and buyers try twice like this. Do I sell down here? No. We want to sell high. If I sell down here, what's the problem? It's not very attractive to the big money traders in the market. Why? Because what's your risk reward? Your risk is up here. Your reward is right here. Do you think somebody with 20 years experience and a couple, $10 million in their account, right, are going to take that trade? No, they're not. Right? No, they're not. Where would they take that trade? They would take it above this high though. Why? Because you go above this high, now think about the risk reward equation now. Now think about, is this trade attractive to a bigger lot trader who by definition we have to respect, because you can't just show up in the markets and make money because you have a lot of money. Right? You come into the markets with a bunch of money, you're going to leave the markets empty, right? Empty pocketed. Okay, if you don't know what you're doing. So we have to really respect that smart money idea in the markets. I know it's overused a lot. Anyways, think of the risk reward now. Now the risk is there. Now where's the reward? It's way down here. That's why that's a better trade. It's not just based on stops and targets. How much do I risk? How much do I reward? It's based on, remember, we really rely on the bigger traders in the market to push these markets around. The only way we incentivize this is to give them a small amount of risk and a big amount of reward. Does that make sense? If it does, give me a hell yeah in the comments section. I'd love to know you're listening out there right now, 30 minutes into this video right now. Anyways, back on off my tangent now. I mentioned earlier, what if we pop up and we hold that pullback? We pop, we hold that pullback, and we blast. This is easy. This is the easiest one right here, because now you go out, you draw that trend line off that high. Okay, you draw that channel off that low. You look left, you find some prior swings, right? There's always a bunch of little prior swings, right? Going higher here. Find a bunch of prior swings. Get underneath one of those prior swings. Get underneath the moving average. It's one of the biggest reasons why I draw my channels backwards. Because by drawing them backwards, you get it underneath the moving average. But then you can get those bears coming in. They're trying to get short because isn't there a range down there? Not anymore. It's not. Wait for those bears to sell short and then bam, run those stops. Where's my target? Well, this is pretty easy. We know that prior week close at 39.05 half. That's targeting the S&P. Same thing on the Nasdaq. Nasdaq wants to fill that gap, but if you want my opinion, remember, it's that first leg and that third leg. Okay, that will really fine tune that exit. And if you can get in the habit of squeezing out 2 or 3% more on your final targets, think about if you could make 1% more per day by simply being better at your exits. That's 5% per week. That's 20% per month. Do the math. You can see by improving yourself just 1% per day. This is why I kind of harp on this in my trade room. Focus on getting 1% better every single day, because it compounds, it snowballs, Anyways, that's an easy one. Or one of my favorites is that pop up, right? The bears come in and let's say something happens overnight. The White House says, no, we were wrong. I misread the teleprompter. It meant lower for tomorrow. I'm kidding around with you, obviously, right? But Anchorman over there gets it wrong. I'm kidding, obviously. I don't mean to offend anybody out there. I'm having fun with you guys. Now we end up, and the bears go, oh, shoot. Remember that big bull trend overall? Now they keep cranking. We go higher here, right? And we grind. Easy. Find that high, find that low. This is always one of my favorites because that pop and grind, any pullback at that point is going to get bought up 9 times out of 10. Right? That grind as we go higher, that grind is not buyers buying up there. Those are the sellers going, oh, shoot, I'm out of here. Get me out of this thing. And that's what causes that fluttering, right, of price there going higher. You don't want to miss that pullback after that pop and grind as we go. All right. So remember, we definitely want to be aware of that possible rotation off of that low. I think we've covered a lot of this and probably more than we needed to here on the S&P, but at least you guys have a good, and again, I'm sure I'm missing something here tonight, but I'll fill in the blanks tomorrow morning with you guys in our trade room, which opens up every morning at 8 o'clock Eastern time for advanced members. Now, one of the more difficult markets here for tonight is the crude oil futures. Oil's been a little bit rocky over the past few days, past few weeks. A lot of this because they're kind of hashing out this idea of how to deal with Russian oil and yada, 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 and price caps and things like that. So this will definitely get ironed out here sooner rather than later. We do have a rollover on oil later on this week. Just an FYI, if you're an oil trader like we are, Thursday is looking like rollover day. This, of course, is a 2,000 tick chart on the 822. We'll probably be in the 922, if not Thursday. But by the end of this week, I would imagine we'll have transitioned over to the 922 contract. What are the most important clues right now on this crude oil? Well, you'll notice it's a bear market again into a trading range, right? That's pretty easy. It's pretty easy. We had that strong move down. They retested that low, and we pretty much went into kind of like a little bit of a sleeper right here around that range, and now we're popping higher. Now, we talked earlier about the concern about this. When we rotate off the low of a trading range, why is that important? Because momentum. And so now we've basically gone back to take out the side of that trading range. So we now no longer have kind of the easy long, right? You know what I mean? Like I said before, if you can get a reversal going off that low, it's usually pretty quick to get that other side of that range tested. Now here we are, though. You can notice, too, the amount below the range, the amount above the range. It's spooky how well those work. And remember, the self-fulfilling prophecy is a big part of that. So we had that trading range. That range below us is still technically a magnet, but that rotation off the low, I would say, gives this jump a lot of bullish momentum. And with that bullish momentum, and then real quickly here, let's zoom out real quickly here on this because the oil is very similar here to the S&P and the Nasdaq. We mentioned this earlier on the Emini and the Nasdaq here. We had that big run up from last week. And so, I mean, can you really think of any better place to buy the dip than to buying it down below that trading range? In fact, if you watched the video earlier tonight, right, on that Nasdaq, what does that look like? Strong move up, relatively shallow pullback, higher high in price. What do we always say? Traps, baby, right there. So it's easy to see that's the same one of the breakaway patterns we talked about earlier on that NASDAQ. Where do the buyers want to go right now, right? If the buyers came in and bought that low, where do they want to go? They have one thing on their mind, that is to get back to 105.25. That is definitely where these buyers want to go. That is the objective. Now, how could these buyers, how could they achieve that objective? Well, we could use that hidden channel. This hidden channel is a really nice one, marked up off that high, marked up off that low. Now, unfortunately, we're right into some areas of resistance, but I really think that hidden channel here is a great spot for us here on the long side as well. So how do we buy it? How do we sell it here on the crude oil? Well, first of all, I think buyers have a great shot at buying off of that hidden channel. It's a little bit tight because, again, we've got resistance in our way, but I can find a way to work around that. I also think, too, the buyers can buy off of that low. Now, this will obviously be a challenge for momentum, but as you guys know, we can look for a turning point, signs of exhaustion, and some sort of catalyst. I also think, too, buyers have a chance for a breakout. look at all that wide open space we have. We can crack above 105.25. Look at that thing, right? It's basically blue skies, baby, all the way to 110. I got that weekly close at what, 108.5. That's a really easy thing to see. It could easily happen here. How about the Bears? What do the Bears want? The Bears have a difficult problem right now. If they go higher, this trend line comes in their way. Okay, which again, we can work around, but I have to be very careful here to kind of use that trend line as a level of resistance going back down as we go. That trend line right there is kind of the backbone of a possible poke up through those highs here on the oil. And then also to think about it, if the market can begin to roll over here, there definitely are now options here for shorts above prior swings for the Bears as well. And then if we can take out that low, and remember those breakout patterns we talked about earlier? Yeah, there may be breakouts going lower here on the oil as well. And just like to the long side right now, the short side has all of this wide open space. And a lot of this to do with the fact that we had that big break higher here late in the week last week. So in these situations, the best thing to do is think about what if we go up, what if we go down, and what if we go sideways. I think one of the best short-term opportunities here is that long off the low of this channel. What's my concern though? Well, there'll be a trend line in my way. As the market pulls back off this high, this trend line now ultimately becomes your best friend and your worst enemy. And what's my overall concern? My concern is the trend line, and my concern is that range acting as a magnet below us. So we need to work around both of those problems. This is exactly where we look for those bears try once, those bears try twice, and then bingo, off of that trend line. That's a really nice trade there that sets up basically to finish off that move going back to retest the high. It incorporates that new hidden channel we talk about so much as we trade the turn. It traps in the bears and lets them kind of dig their own grave or wrap that noose around their neck. And it uses that resistance level as a support area for us as we go. You'll notice it kind of wraps together all the stuff we're going to worry about into a pretty easy catalyst for that run going higher. I like that one a lot. We'll see if we get that overnight. Or do we see breakouts going higher? You know, this is easy, right? We know the bears are going higher here. We know there's resistance overhead. So do we see a real strong pop, right? Real strong jump, shallow pullback, higher high in price, traps, baby. What do we call that? A 2-try breakout or a 2-try trap. Easy one. Or do we retest that high? Do we pull back to the moving average and then start to blast off that moving average? 1, 2, 3 breakout pattern. Mark that high. Mark that low, right? Grab that first test off of that low. First test is the best test always, always, always. Or do we pop and begin to grind and grind and grind? Mark off that high, mark off that low. One of the easiest ones we see. Find that trap. Get underneath that moving average, get those bears coming in below the EMA. You'd be amazed how many sellers will still try to sell that pullback, even with that strong move going higher here. And we can buy traps, stop runs, first leg, third leg as we go higher. Watch that breakout as we go. Now, as we go higher here, can I sell this thing right now? I can. What's my problem though? Momentum and this trend line. So this is where I'll tell you the exact same thing I tell all of our students. The bigger the momentum, the bigger the 2-try needs to be. If I try to sell off this high right now, I am very much against momentum. Not just short term, but long term as well. So whenever you're trying to turn the corner like that, we talked about major turning points, we talked about exhaustion, and we know about catalysts now. This is one of those times where there's a very big difference between selling this level overhead and selling those tops on the S&P and the Nasdaq right now. What you really want to think about is the stronger that momentum is, the bigger the turn needs to be. What that means is that simply getting a little 1, a 2 is not going to be enough. That's not enough. We need to rope in more buyers. We need a bigger catalyst for that. And to get that, it will usually be something like this, where it's a bigger 1, it's a bigger 2, and then we look for that short going lower. These are tricky for a new trader because what constitutes big enough? We'll have to see that tomorrow in real time in the trade room. But one kind of giveaway I'll give you guys this evening is the bigger the momentum you're to turn around, the bigger that 2 try needs to be. And again, you want to try to use that trend line, right, as that level of resistance. A lot of times what happens is we'll see those buyers try once. The market will then start to kind of tear down and run lower, and then again start to go higher there. At this point now, is this now 1 try, 2 try, and I should sell down here? No. Why? Because think about your risk reward. Risk here, reward here, right? It's not the right side, right? It's too lopsided for the risk. The better trade on this is to go out and get that trap above that high. And as you can imagine, I can draw a trend line off that low, up off that high, and combine that short as well. So think about that coming off of that high. This is a much better looking short than simply trying to go up and go, okay, 1, 2, and let's hope it goes lower, right? We like it when we get a little bit of momentum shift there with 1, right? Maybe 2 going lower, and then we're thinking, okay, let's go bigger, right? Go bigger 1, bigger 2, grab that trap. And again, key is get above that moving average. That's a pretty good short too. I like that short a lot better than trying to pick that top off of that high, right? And then don't forget, as we go lower here, right? If we go lower, let's say, for example, we kind of push and we grind down. That's a good short, right? Because again, we got that range below us. We know they want to take out that low. Momentum turns for the bears. So we find that short off the high of that channel. Pretty good trade there. And then as we go lower, remember, it's that same issue. We're very bearish at that point, trying to be a buyer. It's that 1, it's that 2, it's that failure into that hidden channel, that tango, that dance we know the markets like to play as we go. And then keep your eyes on those breakout patterns, right? That 2 try trap, that 1, 2, 3 breakout, that pop and grind. So once they take out that low, do we see signs of exhaustion, a squeeze, or do we see it break down and take out that 100 and keep on going lower, which again could easily keep on grinding down. That 96.5 level down there is the next thing within striking distance. Again, though, remember, we're pretty bullish right now, so be more on the lookout for the buy side until we start seeing those signs of exhaustion or a full-blown reversal. All right, guys, wrapping things up here for tonight. Great job planning the trades out here tonight. This is the easy stuff. Tomorrow, we roll our sleeves up and we get back to work, 8 o'clock Eastern time in our trade room. If you're looking for a great place to learn and trade along, if you're missing too many good trades each day, or you're making too many mental mistakes, or maybe you just want to pick up a few more profitable trades each day in your own trading, I'll put all the free course links to learn the basic strategy. I'll put all the membership links. Everything will be in the description of the YouTube video or on the website. I'll put a button for you below me tonight on the website. Don't be afraid to call the office. I'm always here to help. So don't be afraid to call about which brokers and which charts work best. I'm happy to help answer those types of questions. We also have live chat on our website, and you can always drop questions in the comment section here on the YouTube video, although I will admit I'm a bit slow getting back to those questions. So the easiest way to get a quick answer is to call the office, send me an email, or jump on live chat. All right, guys, I'm going to wrap things up here for now. The video has gone on long enough, but kudos to you. Congratulations for watching all the way to the end. If you're watching this video right now, you are the reason I do these videos. You are the hardworking trader I make these videos for. So really happy to have you with me here on this video. So make sure you subscribe. Hopefully by now you've hit the like button on this. Hopefully you learned a bunch of lessons here tonight. And hopefully I'll see you soon in our trade room. You can come learn and trade along with me every morning and do it the right way for your trading. All right, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye-bye for now.